Hello everyone, this is Nidhish, and today I'm going to talk about the game around the Gamestop. So many of our students and the fellow professionals, everyone is asking that, okay, what has happened on GameStop and why did this all mess around, especially the Melvin Fund, which is also in the news. So here I'm going to explain you what is happening around GameStop, what is the short selling, and what kind of issue has been caused for Melvin Capital as well. So this all started basically around end of 2020, that Melvin Capital realized that GameStop, one of the retailer in the area of electronics and gaming, media, etc., that has been inflated. That was the assertion, that was the perspective of Melvin Capital, because they realized that in last 1 year, or actually since it was in the stock market, it never exceeded 4 to 5 USD. However, around December, the GameStop was around 18 to 19 US dollar, which is quite high for GameStop stock. So what was happening is the share price of, say, if it is GameStop, it was rising at a very steady pace, and from around 4, it went up to 19 USD in a short span of just 3 to 4 months, which is tremendous. You can understand that how much bubble can be perceived in normal circumstances, that stock price is just climbing and going up exponentially from 4 to $19. This is massive. So essentially, Melvin Capital realized that, okay, they need to short sell. And what is the short selling basically? So short selling is when you think that something is very expensive and you don't have that many stocks in your drawer, so you can borrow from fellow capitals and other brokers. You can just ask for a couple of stocks, maybe 10 or 100 or thousands of stock, sell in the market at a higher price. So here it is at the higher price, right? So stock has been rising like this. So since it is a 19, you want to sell at 19, and when the price goes down again, you want to buy at 4 and return back all the stock to the person who lent you. That means you will be able to make a profit of 19 minus 4, which is $15 per share. So $15 per share, and if you have really sold short, say 200,000 shares, you can immediately make, or maybe in a couple of weeks, you can make 15 to the 30. Wow, amazing. So you can make $30 million just in a few weeks by identifying such a stock. And what you need to do, borrow some 200,000 stocks of GameStop, sell it in the market at the rate of 19, and then when stocks goes down at 4 again, or maybe even lower, 3, then buy it at the market price of 4 and give back to your broker, right? That is short selling. And in that way, you can make 30 million if you are trading at trading using 200,000 stocks. However, Melvin was not that lucky. So Melvin actually traded around 500,000 of shares at the short. So they did not own it, they just borrowed from the market and sold it at $19, thinking that it will crash, because that's what they thought that intrinsic value or the real value of the share is. And they thought that they will buy it back and return to the broker, and they will be making easily. In fact, they were planning to make some $1 billion of the gain. Now, things did not go quite well. What happened is share continued to rise. it went further up. So stock did not crash further. It continues to rise. If it was at 4 here, if it went to 19, actually it continued to go up and around 320 or so, and now it is going up and down. Okay, so Melvin Capital sold the stock at 19, and when they went to buy it back, and they thought that they can buy back at the lower price to earn profit, it didn't happen, and the stock continued to go up. If it is going up, then Melvin had to really buy at say this price at the start of January or February. So in February, Melvin had to buy this at say 120, which is anyway quite an expensive bit, 6 times. So Melvin was trying to buy it at 120 so that they can reduce their further loss. They are already making loss because they sold it at 19 and they had to recover, buy it from the market at 120 in order to return to the brokers. Still, they are making a massive loss because 500,000 stock times they are making loss of how much? 120 minus 19, so almost 101. So if we make it say around 100, so they are already making massive loss of 500,000. Okay, so this is a massive loss. 500,000 K loss they are already making at this point. How much we have? It is 500 million USD that is already lost at this point. But the bad luck did not stop here. It continued further. So when Melvin was trying to buy it from the market did not have enough stock of GameStop, because for various reasons people were still thinking that it is a very good and hot stock and continue to buy this. So because they were buying further, Melvin did not had enough shares in the market in order to fetch and return to the broker, because then they could have just stopped their loss at this point. And unfortunately, it could not happen. So in that case, they were trying to recover and buy some stocks, but they could not fulfill all their position to return, and stock continued to go up. This situation, when a shorter, which is Melvin Capital, is trying to recover or buy the stock to return to broker, but because of the liquidity, if they cannot buy it, this is called short squeeze. Short squeeze. Because this is a liquidity issue when one is trying to cover their short position. So this is short squeeze. Of course, Melvin could have also done something differently. They could have bought some options in order to cover their future losses. So they could have gone into long call, right, to buy some stocks at a favorable price. And then they could have done the shorting. It could have prevented their loss. And it's a different maybe story and class. We will talk about what is the different type of options suitable for this. But for now, you can understand that they could have bought certain option in order to cover their position in case of any such escalation in the price. But they did not have any option also to cover the positions. So essentially what happened is they could not buy the stock. There was a short squeeze in the market, and the shares continue to go up, and their loss was just inflating day by day. In fact, the amount of short which was done by Melvin and some other similar funds like them is 139% of the total equity which was issued in the market. So number of short position which was sold in the market was more than like a 1.4 times of the original number of shares which was in the market. So if GameStop had 100 shares floated. Short selling funds actually shorted 140 stocks, more than the number of stocks that was in the market. Hence, that was completely a crazy number of shorting as well. And who knows what was the expectation behind this, but it was purely a speculation game. Anyway, so this was the reason why it made loss. Now, some of you might wonder that, okay, hold on, something is not right, because if Melvin and other funds are trying to short sell company stock like GameStop, why the price rather than going up did not crash? Because if they were shorting at say 19, the price should have gone like this: 18, 17, 10, 5, 4, 3, something like this. Should have come at 3 or even 2. That's what generally happens when a lot of shorting takes place in the market. But here in this case, I think market was quite different, and it played the black swan. Quite unexpected event happened, and we can understand it here. What was the forces behind this? So, long story cut short, what is happening is nowadays, in last 6 months, there's a lot of capital in the market because various government is opening their treasury, giving a lot of money for people to maintain the liquidity. Bank is also kind of loosening their strings. So there is a lot of capital in the market. On the same time, there are a lot of saving. People are trying to just keep the money and save this. So a lot of saving is also there. So this is giving people a lot of dispensable capital and cash to invest into the market. So people have a lot of capital in the cash, which is sitting idle. And in that situation, basically, we also have a lot of social media players, including, say, for example, I can give you eToro, one of the app which helps people do the trading, also share tips, advices, etc., etc. So they claim that in 2021, in this new year, hardly started, right? Just 2-3 weeks into 2021, eToro claimed that they have almost 300,000 plus traders registered on their platform. So 380,000 more new investors had registered in US market alone, only on one platform. So you can imagine how many new traders are coming up to invest in the market. And same thing is happening across the world. So a lot of trading activity, a lot of app which is coming in the market, helping people to do the trading, a lot of capital and savings as well. So this is giving people the privilege, liberty to invest in the stock, and because of that, market is ballooning, market is snowballing and gradually growing. This could have happened for GameStop when the share started to rise from 4 to 9, and rather than going down, it continued to go up because not only people have enough cash and a lot of saving, but also there are various social media platforms like Reddit, Twitter, Facebook, which is intensifying the investment market, like making it very hot. A lot of trading tips and advice and the discussions are taking place on online media, or online platforms, social media platforms, which is increasing and intensifying the amount of investment taking place in the market. It is not only causing liquidity, but also more and more people are betting in the market and interested to invest. So, long story cut short, Reddit, one of the social media site, allegedly it is said that they have really caused the frenzy in the market, which caused not only the GameStop share to go up to 19. Actually, it helped it go further up in the game. It did not crash after short selling. It actually rather continued to go up because there were lots of discussion about GameStop on Reddit. Many analysts, many traders were sharing their tips and advice, and they continue to say why it is still a great stock. So those suggestions, those discussion actually really continue to push the stock up, despite the fact that some of the hedge funds led by Melvin Capital were shorting. So there are two forces working parallel. One, hedge fund shorting, another, social media and different analysts are making suggestion that it is a great stock. So the stock continue to rise. And when other hedge fund houses started to cover their position to return to their broker, they were still able to cover some of the position. And it also confirmed that, okay, stock is a good one, because there were still some liquidity and movement in the market. So those movement and liquidity plus a lot of social media influence, Wall Street analysis and their opinion, it pushed the price so high that it went to 120 within few weeks, and within 2-3 weeks it crossed $300 mark as well. And that was the reason why Melvin Capital lost $5.5 billion. I will repeat, $5.5 billion was lost by Melvin stock within 3 months. In fact, it started the year with $12.2 billion AUM and lost 30% within 2 months. This is a massive loss. It's a historical loss. And that's why I call it a black swan event, because it was unexpected that the short selling will not impact the company which is shorted. Actually, it will impact the fund which is shorting. This is quite unprecedented. Hence, after such a massive loss, the company, the fund, Melvin Capital, they had to really borrow additional capital from market, in fact from their fellow competitors and fellow funds like Point72, Citadel. They financed almost 2 billion plus cash to Melvin Capital to survive. So essentially Citadel and Point72 came to the rescue, because Melvin Capital was in serious trouble, losing 30% within 2 months because of such unexpected incidents on short selling. So this is the entire game, the sequence of event, why it happened. In fact, another reason why the stock continued to go up is that there's a tremendous amount of rise in the capital. In fact, US stock market and US company which had capitalization of $33 trillion end of March 2020, the capitalization has continuously gone up. And this is not an exceptional stock rise. There are many such stock which is rising exponentially at an unprecedented pace. It is rising at a very fast pace. So the stock market has reached, the market capitalization has reached to $88 trillion US as we are talking right now, and it was just $33 trillion end of March 2020. So you can see what is the pace of rise. It is almost 2.7 times just in 10 months. This is unprecedented, and that's why the stocks are rising. And if some company think that, okay, this is a bubble and they can do the shorting, they can end up making massive loss like GameStop. So now we understood what is short selling. We understood what is a short squeeze and how this works, and it can really inflate the loss of any company. So let's see how what happened, that if Melvin Capital just shorted 500K of GameStop share, why did it make a loss of almost $5.5 billion? $5.5 billion. This is a massive risk, and it's a massive loss as well, right? So we'll understand now with a small example how the short selling can really inflate the loss. Okay. So let's say I buy a stock at 4 USD. In fact, let's keep it 19. So I borrow a stock at 19 and I sell it in the market for this much. and I think that I can recover it. I can buy from the market and will short and will return the stock to the broker, because originally I had promised that I will return the stock back. So that's my expectation. I made $19 already. Now, if the stock goes to say $100 and I have to buy it to return to our fellow brokers, what will happen is I have made a loss of 100 minus 19, which is $81. $81 loss on investment of $19. What is the percentage? This is almost 415%, right? So here minus 100 the original investment, we have made a loss of 315% within 2 months. So this is a massive risk. Had we invested all 100 rupees and made a loss of and the share would have gone down to 19, the loss would have been only 81%. But since we had to return it and stock market has gone up significantly, there is a massive infinite potential to make losses when we are doing a short sale. Hence, short sale and a situation like a short squeeze can really wipe out the entire fund or any company. So one has to be very, very careful while taking the risk and speculating about any stock. We need to see the pattern. We need to see how the market is growing and what is the amount of capital flowing in that, and what are the different players and the forces which are influencing the rise of the stocks, or are there any other factors that the company might not be traditionally aware. So we need to also factor the social media influence and the new forces which is in the market, which can kind of fail our risk management models, because the risk model which is developed in last 20-30 years, that might not have factored the new forces like a social media, Reddit, and informal analysis and the tips and opinion given by the brokers and financial analysts. They can really impact the market and the risk management, the trading business, and entire hedging and speculation procedure. So we need to be extra careful. And this is the story about Gamestop. So please leave your comment, opinion, and feedback on the video, and we'll come back with another such interesting video. Thank you so much for listening.